and welcome everyone to Almus Market Mornings, your daily dose of financial updates. This is your host Swaraj, and with me I have Mr. Pankaj Rathi, who will take us through the developments of the day. Now, there are a few interesting things being played out in the global markets. S&P 500 has recovered nearly 50% from the correction journey it started in Jan, despite the US Fed coming up with a more hawkish tone. While in the European front, we are seeing the ECB balance sheet expand to a record $8.7 trillion as ECB keeps buying bonds despite record Eurozone inflation. Pankaj, what is your sense of these developments and how have the markets performed overnight?
So markets have been positive overnight. Market continued on a very confident Powell's commentary on economy and inflation few days back. They are interpreting that what Powell is saying, that we are in a very strong economy zone and we need to control inflation. And that's market taking a very positively. Looking at this, what's happening is there's a value buying happening in the technology stocks. And also into a banking stocks, profitability might be increasing because of a higher yields. The other thing which I can think of is market also interpreting that the current projections of rates or maybe the swaps which are pricing in is on an extreme scenario, and in the reality that might not happen, and that's all being taken positive, and markets are moving up. That's on the market. In the absence of major economic data, markets have been taking cues from the peace talk on Ukraine as well as move in the bond yields. Now, after Powell's hawkish commentary, as I earlier also mentioned, that US Treasury yield curve continued to move higher. And basically the spread between 2 years and 10 years widened to 23 basis from 12 basis on last Friday. Now, market interpret this spread below as a recessionary signal. Now, widening again has increased the confidence of market that probably this will widen. 10-year might go higher, but now 2 years would not be moving that much higher. Coming back to Ukraine, Ukraine basically after PM's statement about not pressing move or basically a compulsion to join NATO and also being open for discussion about Crimea and Donbass, that's gave us some kind of a confidence to market. Now, coming back to value things, it's basically gold is still smarting from overbought condition as the peace process underway has removed the safe haven bid from the yellow metals, but still it's getting support between 1900 to 1920. That's the on the gold. Now we're coming back to dollar. What happening in the dollar? Dollar is seeing a mixed response against the major currencies, with the Japanese yen getting a phenomenal weakness, and that's a very positive correlations over the years have been observed. Whenever the rates expectations are higher, the Japanese yen looks like it will be weakening. Where the Chinese yuan also we are seeing that there's some kind of a unwinding happening because of a safe haven status which has been given for last several weeks. Euro is supported by medium-term buyer who look for a top in the rate differences between Europe and US, and currently growth differential in the favor of US. But once things clear out, Euro might also come back. Eurozone economy. Commodities currencies have been the best performer in last few weeks as a shortage and growing demand for commodities help the economies doing better. We should also look at the emerging market currencies, and they have held up well, avoiding any major tantrum in the face of tightening policies by the Fed. And that's all because of they kept a good amount of reserve buffers, and they have done a preemptive rate hikes. India has not gone for rate hikes, but India has built up a significant reserves. Rupee might see a positive bias, a slightly positive bias in view of a seasonal flows and exporters selling interest. We might see again a range of 75.70 to 76.50. Indian 10-year yield is consolidating between 675 to 690 and likely to be in the range till this 31st March. And today again, Powell would be participating in panel on emerging challenges for central bank governors in a digital world at the BIS Innovation Summit today at 12 GMT. Market would be looking for his comments again on a monetary policy. That's all from me today.
Okay, that was great, Pankaj. And as you mentioned, market will be looking at Powell's statement at the BIS Innovative Summit. Now, also globally, we are seeing multiple factors being played out. The war, where we are getting rapid developments, and dollar having mixed signals against other major currencies. Slightly positive bias for the rupee as well. While I cannot emphasize this enough, in such times, it's important to have a robust risk management system. So, guys, ensure that you have that in place. Until then, have a great day and see you all tomorrow. Bye bye.